Hello, everyone. It's John Strebler, John Strebler's Investment Outlook. Greetings to all the gold bugs around the world, silver bugs. For the last couple of weeks, gold and silver have just been moving sideways for the most part, up a little, down a little, not doing too much. But I'm on record as believing that we're in a historic bull market for gold and silver. It's going to take prices up to levels that will surprise a lot of people. So today, this video, I want to share with you why I think that, and then also take a look at how high gold and silver might end up going. Of course, there's the fundamental factors, and one of the most important fundamental factors for gold and silver is a strong seasonal tendency. Gold, especially over the last 50 years, we've documented that it has a tendency to rise between about August and February. Over 50 years or so, it has done that about 3/4 of the time, 75% of the time. Those are really good odds. And we're kind of in a sweet spot right now where the bottom for gold is typically around July or August. And here we are in early October, so we've got several months ahead of us where we should normally expect higher prices. So we're going to stop this for a second. I want to show you this chart that I found online, and it shows, I think, 30 years or so of price history for gold. It shows the seasonal tendency, so it starts here to January, February, March, all the way through December. And you can see that around August or so, prices are bottoming and they start to move up. And by October, they're moving pretty nicely. November, they're moving higher. December, they're moving higher. And then we can go back to January and they're still moving higher. And then they top out around February. Sometimes you then have a secondary peak in May, just like we did this year. But anyway, that gives us, a pretty good reason to think that gold might be going up for the next few months. Another issue, kind of a similar issue, is what's going on with the overall price level. Inflation, which is defined as a steady increase in the overall price of goods and services, that's been heating up lately. And the way that I measure that is by using what I call the Strebler Inflation Index, or SII. It's my own proprietary index that I came up with a long time ago. And so I've got it plotted here going back to 2019. 2019 is a weekly chart. And we can see in blue just the weekly prices for it. And then in orange, a 34-week moving average that kind of smooths out all the little bumps. Well, we had a nice breakout a couple of months ago on it, and it has stayed above that moving average. So that leads me to believe that prices, overall prices, have turned the corner and are now heading higher, and that's going to be a big boost for both gold and silver. So I need to go back to my script. We're going to add to that another important fundamental factor, and that is all of the spending that's coming out of Washington and the world capitals and out of central banks. Central banks are virtually dropping money out of helicopters, and federal governments are running huge deficits, gargantuan deficits in the case of the U.S., like we've never seen before. All of that builds up pressure that ultimately will lead prices to higher levels. And of course, gold is going to benefit from that itself. Not to mention political chaos. We see a lot of that in D.C. with a president who wants to do what he wants to do. He doesn't really care about the Constitution. And we have a Senate that allows him to do whatever he wants. And that's creating a lot of problems, in addition to the pandemic. So there's a lot of uncertainty about the situation in politics and health in the United States and the rest of the world. And that's the kind of thing that will move gold higher. So with that fundamental background in mind, let's take a look at the charts, which, as I've mentioned before, is what I care about more. And so we'll start off with a chart of gold. This is a weekly chart, goes back to gold's high in 2011. I use my handy dandy pointer here. Gold got up to about $1,900 an ounce in 2011, and then it had a real tough time for the next few years. Starting at the end of 2015, it bottomed and then gradually, slowly got its feet underneath it, and then started moving up determinedly in 2019 and even more this year. You can see that a few months ago the price broke above the old high. That's what the maroon line shows. But by that point, the prices were pretty overbought, and that's what this indicator up here, the RSI, tells us. The RSI reading back then was above the 70 line, this line here, which means that it was overbought, meaning it had gone up too far, too fast, and needed to catch its breath. Well, in the last couple of months, it has moved lower, has caught its breath. Gold is back down now to around 1900, and it's back down to where it's no longer overbought. That tells me that it's in a situation now that could support another move to the upside. If we take a look at silver, it shows pretty much the same story. Although silver topped out back in 2011 about $50 an ounce, and it's still way below that. So unlike gold, it's not making new highs, but this maroon line here tells us that it has now broken above the highs of the last 5 years. This was back in 2016. It was at about $20 an ounce was the peak, and we blew through that pretty decisively a couple of months ago. You'll notice up here, this reading tells us that it was very overbought at that time. It needed to calm down, catch its breath, and that's exactly what it's done. It's pulled back, and now it's at an area that could sustain a new move to the upside. So we could look for, another leg up in silver and gold anytime now, it seems to me. So we'll also want to look at the gold and silver mining shares. These are the stocks of companies that mine and sell gold and silver for a living. And I watch XAU. XAU is an index. It's actually the Philadelphia Gold and Silver Mining Share Index. It's been around for 20 years or longer, I think. And XAU is a good way to know what gold and silver mining shares as a whole are doing. And so we can see the same kind of thing here, but just on a point and figure chart instead of those bar charts. Here was the peak back in 2011. XAU was up to about $230. It went from $230 down to about $40. And remember the last time I said that these mining shares move a lot more up and down than gold and silver themselves. And here you see what I was talking about. Well, since then, it's also gotten its act together, and I've got two lines drawn in here. They're both pretty important. One of them is a trend line, and it connects a number of peaks. You can see a number of peaks, and you can see that recently the price of XAU popped well above that trend line. So now that downtrend is no longer in force, which implies that now we have an uptrend going, right? But the other thing is what's called a spread quadruple top. You see XAU popped up to here and then failed. Popped up to that same level again, failed. Popped up there a third time, failed. Fourth time, boom, it blew on through. So that's a quad top breakout, which is an extremely powerful pattern. About 80% of the time when you see that, you're going to see sharply higher prices. So my guess is it's going to make a run at these old highs of around 230. Currently, XAU is about 143, I think it is currently. Inside this green rectangle, you can see the same kind of overbought situation that we saw with gold and silver, just using a different charting technique. It ran way up here, got ahead of itself, but now it's pulled back to an area where I think, it may well be ready for another move to the upside. So that gives you some idea of why I think that gold, silver, and the mining shares may be in a big bull market. And now let's look at how high they might go. I know I'm not the smartest guy around, but I am smart enough to know better than to say, well, gold's going to 10,000 an ounce or silver's going to 500 or whatever. The people just kind of pick random numbers that sound good that will get people to do business with them. So I'm not going to do that, but I'm going to give you an idea of what previous gold markets have done, gold bull markets, and that'll just give us some basis for making an intelligent evaluation. Well, let's start with 1970. Gold was at $35 an ounce, and that was really the beginning of the first big bull market that we saw in modern times, as gold went from $35 an ounce up to $200 an ounce in late 1974. Well, that was a 470% move. Pretty nice move. The next big bull market that we saw, excuse me, began in the summer of 1976. Gold got down as low as $100 an ounce, and then it took off. And by the time January of 1980 rolled around, gold hit $850 an ounce. It was not there very long. It quickly sold off sharply, but nevertheless, from 100 to 850, that's a 750% move. That's a big move. The next big bull market in gold started around 1999. Gold actually made kind of a double bottom, 1999 and 2001, when it was trading at $255 an ounce. It went up for the next 11 or 12 years, peaking in 2011 at about $1,900 an ounce for a move of 645%. Well, if you take a look at the average of those three moves, it's an average of 622%. So I'm not saying gold's going to go up 622%, but I'm just saying that would be a reasonable average based on what gold has done before. Well, here we are, here we are with the latest bull market in gold. Gold started off at $1,055 an ounce in late 2015 and has moved up, and we're currently around the peak was $2,090. We're sitting around $2,000 an ounce now as we talk. So from bottom to top was a move of 98%, which is a nice move, but as you can tell, that's only about 1/6 of the average move in the past. So what happens if gold does have an average move, 622%? I would take gold up to about $7,700 an ounce. And so once again, I'm not predicting $7,700 an ounce, but I'm saying that would be a typical average kind of a move. Now I'm going to go back and take a look at the numbers of silver. I didn't make up some charts on silver, but I can give you the numbers on it nevertheless. With silver, during those same time periods, 1970 to 75, 75 to 79, and then from, 99 to 2011. Anyway, the gains there were 344%, 1,135%, and then 1,295% for an average of 925% gain. So, as you can tell, silver moves quite a bit more than gold once it gets going. And so with gold up 622% average for its bull markets, silver up 925% average. Well, with silver's low at $13.80 in 2015, if it were to go up that average of 925%, that would take silver up to $127 an ounce. So one last time, I'm not predicting $127 an ounce on silver. I'm not predicting $7,700 an ounce on gold. I'm just saying that those would be typical, reasonable moves based on what both of those metals have done in past years. That's about it for last time. I do want to just end with this chart, actually. Hope you can see that okay. I put these all together just to give us a little bit more of a visual. The gold bull markets that started in 1970 in red, 1976 in blue, 2000 in black, and the one 2015 that we're still in, right? And so you can see both in terms of percentage, you can see how high they went, but also in terms of time. So for example, this one was only 4 years, this one was 5 years, this one was 11 years, this one so far has been 5 years. So who knows? We'll just have to see. But this is gives you an idea of what they look like when you compare this one. And so in terms of percentage move, really this gold market that we're in now, this bull market, really just kind of started. Not in terms of years, but in terms of how high it might go. So that's it for this time. I hope to hear from some of you. Hope you take advantage of my $1 trial offer for 4 weeks of my newsletter, JSIO. Or if you choose to subscribe, that'd be great too. You can send me $1 to via PayPal to this address up here. Let's see if we can get a little better, a little light on it. jstrebler52@gmail.com. That's my email address if you want to subscribe or want to ask me questions or whatever. If you want to try that trial offer, go into PayPal and send $1 to this payee. And in the meantime, you have a good week, and see you next time.